And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. Another beautiful day out there, a Cyber Monday. Hope you're getting your last minute Christmas savings deals done. I hope you had a happy Thanksgiving. We got a lot to talk about in just a little bit of time. We're going to cover Bitcoin and Ethereum price action. We're going to take a look at Elon Musk taking on Apple, and Dogecoin, ApeCoin really starting to pump. China lockdowns, it looks like, more COVID lockdowns out of China, having some protests, putting some fear in the markets. Oil spiked, stocks dropped. And frankly, I just want to say, look, I'm really grateful. I had some time to have some R&R, a little rest and relaxation with my family. I hope you guys enjoyed your holidays. And let's just jump right into it. Bitcoin on the daily. It's kind of a fresh chart for me today. As I wanted to give it to you guys fresh and just recap what's kind of happened over the past couple of days. But Bitcoin, really sold off here after putting in, multiple drives of hidden bearish divergence. And we can see that on the 2-day time frame, this did play out again and pretty much hit the 1618 target. Which would have been right here, overshot it by a bit. If we want to use the wicks, we are pretty much to a T. And this is, starting to look a little bit more like a bottom being put in. I want to make kind of a bullish case, a bearish case here. And really looks like a weak bounce on the 2-day time frame and just a weak bounce in general. As we know, weak bounces tend to get up to, I'll do a bullish retracement here. Weak bounce is going to come up to the 236 or the 382. So the threat of a bounce up to the 0.5 coming in at 18,500 is still there. And on the 2-day time frame, we are going to cross up, looks like today, is it today? In 3 hours and 42 minutes, if we can close above 16,586. So pressure will remain down if we close anywhere here or lower. We got another 3 hours and 50 minutes on this candle. What is a 3-day? 3-day will not be closing today. And I will just point out the 5-day, which has continued with its downside posturing here. And what I mean by that, we see momentum is crossed to the downside for multiple closures, and we're seeing volatility expand off the lows. And I think the average move is about 40% from the expansion to the next low. And we had about 26% on this move so far. So where would 40% take us? Down about 12,500. And if we wanted to extend it and we got a 60% move or a 50% move, I think those other downside targets would be in play. But is it all going to happen in one shot? Is it all going to happen over a couple of days? I personally don't think so. I think it's probably going to be more sideways and down and consolidation over time. And so where do you get the first targets? Well, I would just look at this consolidation, which could be a range or it could be a descending triangle. And a really easy way to get a kind of pivot there would be doing a nice fib right there, coming in at 15,000, the measure move off of this descending triangle. And I would mediate that with a daily closure below 15.7. And that would probably get you down to that 14.6, 14.5 target, something like that. And I would expect some kind of a bounce from the 14.5 region. What else did I want to bring up here? Daily Stokes were crossed up and we pretty much went sideways and down. So kind of a bearish reset. If these do cross back down, very, very likely, we're going to see pressure to the downside sooner than later. And I will follow up lastly on the 2-day volatility versus momentum signature, which we talked about for some time, the average move being about 30%. We got that move and now it's over. We've lost the exponential. So you would expect kind of a mean reversion bounce up to this region, somewhere around 18.3 to 18.5. that is where the bounce is typically going to come in. And that would be right in line probably with the 618 fib here. So 17.8, yeah, somewhere in this region, that's where you would expect a bounce to come in. If we're going to play out more immediate downside, what I would want to see is pretty much a daily closure below this last pivot right here at 15,750, and that would look good for, you know, that move down to about 14.5. And if you look at an extended target, you can see based from this high to low, right? The 1618 is coming in at 12,000 bucks. Let's see where it is at on the CMEs. Which daily stokes are down on the CMEs today as long as we're below 15,952, which we're sitting right on the edge. We have a volatility reset here. And if this does confirm another lower high right here, closing anywhere here or lower, you would expect continuation in my book. Where does that bounce target get you? Where does the target get you? Volatility expansion off of the daily time frame, I think it produces somewhere between a 15 and 20% move. So if we were to shave off, and we expect price to go in the direction of the trend, 15%, would you put you at about 13.5? 20%, probably around 12.5. And where do we get all these, you know, lower term targets? And this is all going to be mediated with the US dollar here. Again, what I've been kind of saying is since Bitcoin has not been benefiting as the dollar came down, stocks rallied, Bitcoin put in a measly bounce, really didn't take the benefit as the stock market did. I mean, the Dow Jones almost, you know, made it back to new highs, almost close enough. And that's what I would call a bear market rally. And I'm going to say it, you know, over and over again until that trend changes, which, hey, this could be the first higher high on the weekly time frame. But as far as I'm concerned, this is probably going to be a bit of a fake out. You've got Goldman Sachs and Morgan Stanley all forecasting, I think, you know, recessionary type environment next year. So the question is, are we going to get a bit of a Christmas rally or a Christmas sell-off as the hedge funds begin to, you know, continue to de-risk and as they continue to, you know, make adjustments for tax purposes at the end of the year, et cetera, et cetera. I think we could come into a bit of a storm of selling. And then I just wanted to pop this up here, the economic week ahead. Tomorrow we got the S&P Case-Shiller Index, Home Price Index, consumer confidence, which is going to be, you know, pretty good. You know, the consumers tend to have a pretty good scope on, believe it or not, the inflation and spending. Then Wednesday, we got Fed Chair Powell going to speak, ADP employment, JOLTS numbers, pending home sales. Thursday, jobless claims. That's a big one. And then Friday, the November jobs report. And here's what I would say is, if whatever economic data comes out and it shows that what Powell is doing is not working, it will be bullish for the dollar. And we could see the dollar play out a pretty big bounce and risk assets really take a hit. And here's what I'd say on the dollar. We are about to confirm another drive of hidden bullish divergence. That would be 1, 2, 3. That'd be 3. Coming back from this pivot right here, you'd have 1, 2, 3 drives. And I would expect that move up to the green 55, which would be this green box right here. And then it will be lower high or not. I can tell you this on the quarterly. I did spot this out here. Any kind of a tick below 105.60 is very likely going to get us a move down to 101.55. And that'll be based off the bearish divergence on the monthly time frame, which could get us a clear shot down to 101.75 for the dollar. So it'd be interesting to see the dynamics that play out between the equities market and Bitcoin as the dollar comes down, if all of a sudden there is a depegging or an inverse relationship. Needless to say, we'll be keeping a close eye on that. So the last thing I'll bring up is the Fed's terminal rates. That's what we want to be keeping an eye on. Right now, they're pricing in, I think, about 5.15% as a terminal rate, the rate they're going to raise rates to and hold it there for some time as the inflation gets wound down. Hopefully, that's the Fed's plan. And if the terminal rates go higher, any kind of pressure there, that is going to be harsh on the markets. And yeah, that's it for today. I would say in general, what has the market spooked is the China lockdowns. Apparently people were protesting. China's saying they're getting a bunch of, COVID cases. It's apparently a bit of an outbreak out in China. I thought this was pretty entertaining today. Elon Musk lighting it up on Twitter, calling out Apple on two things. One, he says Apple puts a 30% tax on everything you buy through Twitter. And what else? 30%, pay 30% or go to war. And what else did he just tweet? I thought this was pretty interesting. That, what did he say? Oh, yeah. Apple's basically threatening to take Twitter off of their platform because, he's allowing free speech. I want to see the exact tweet from Elon. I'm going to come on, Elon. Where are you? I'm not the Apple has mostly stopped advertising on Twitter. Did they hate free speech in America? Elon also said Apple has also threatened to withhold Twitter from its app store, but won't tell them why. So, as Warren Buffett is saying, all the people out there that are swimming naked, more and more things are coming to light. And I'm glad Elon is taking a stand up there against Apple. And needless to say, I think this is going to be a part of, free speech is going to be very, very important going forward. And lastly, I'm going to touch on, again, the economic data coming out this week or this month is the big decision. Is it 50 basis points or 75? I think a lot of it's going to have to do with the inflation numbers that come out this week and next week. And it'll also be very important to know, if Powell's speeches, the Fed chairman's speeches, they're generally going to set the tone for the Fed rate hike. So I'll be keeping a close eye on some of the Fed speeches this week. We said we'd talk about Bitcoin again. The best case for the bulls right now is we do flip this around and basically confirm on the daily time frame a higher low. Right now, it looks like another lower high, which I would be looking in general for a move back to the bottom side of the range. Do we have enough juice to, really send this market down? I don't think, unless there's another catalyst in the news, some kind of, black swan type of event. Right now, Bitcoin seems to be holding its own and more poised for a bounce than not. However, if Dixie, again, is going to confirm anywhere here or higher today, I expect a rally up to 109.48, and that would be in line, actually, in fact, with Bitcoin probably breaking the range to the downside. And here would be kind of the next, again, downside target with a daily closure below the range here. I'm looking for a quick move to about 14.7 and a bounce from there. 5-day time frame, which is a very powerful time frame, along with the weekly, are still crossed down. Momentum is to the downside and volatility is expanding. Again, you expect the price to go in the direction of the trend. The last major move, and again, remember, we went through a large period of consolidation Bitcoin was sitting in this range for, I think, 140 days or whatever it was, a very, very long time. We finally broke the range to the downside. Is this all we're going to get is a 20% move to the downside? You know, call it 26%. When the last two drops were, I mean, this one was a 50% drawdown and this one was a 63% drawdown. Keep in mind, you know, now that open interest has come down, the leverage positions, the leverage ratio has come down, there has been a big reset. So there isn't as much juice, I'd say, or gunpowder in the tank right now to send the market lower. I'd want to see open interest start to come back up, really before another kind of cataclysmic move. But I really think the people on Bloomberg are literally paid to say, I wrote down one of the quotes. They say the recession won't be that deep, right? Inflation, it's just going to be transitory. It just shocks me at what they're putting on the news. They continue to put on the news. And Ethereum, you know, I think ultimately does going to, you know, make its way down to the bottom side of the range at about $1,000. And if that gives way, you've got 878. And ultimately, these things take some time to play out, but multiple drives of bearish divergence. The first target hasn't even been hit really at the 1,028. Yeah, close enough is close enough, right? Target hit, but I think the next target down is in the 700 range. And this, again, could take some months to play out. I'm really kind of seeing or waiting for open interest to build itself back up. When I say open interest, I'll just throw this up here really quick. Open interest is currently at 6.4 billion. That's all the leverage positions. It was at 10.2 billion before the crash, right? So we shaved off $4 billion worth of open interest. Up here, it was at 12 billion and it dropped down to about 7. So we shaved off roughly 50% of the price action there. And open interest was 14 billion, shaved off to 9, so $5 billion. We just lost roughly, open interest went from, what was it, 8 here? Oh, roughly 10 billion to 6. So we lost a 4 billion. Yeah, again, I think the big question here is bounce or not, and I think it has to do with the dollar. If the dollar is going to come up this week and retest this green box, I expect risk on assets to feel the pressure. If the dollar continues to tick down, and again, any kind of a dollar move. So ultimately, I am leaning towards something like this based on the kind of the monthly, but you know, maybe a retest of this box, and then we might kind of trickle down over time and test that 103 area. I mean, we had a major macro consolidation and breakout. You can see this is the macro range at 102 to $88 on the US dollar. You know, with the rate hikes and the rest of the world falling apart, if the US dollar looks stronger, I really wouldn't be surprised. I wouldn't be surprised to get a backfill on this month's open. In fact, you know, we could trade sideways the next 2.5 days and then get a backfill on this open. And I would not be surprised to see 109 tested and 102 tested over the next month. That's just me. Again, I don't have a crystal ball here, but I'm just giving you what I'm looking at in the chart. So if we can assume that the dollar has not been, Bitcoin has not been really benefiting as the dollar has been coming down. And we do suspect that as the dollar does go up, Bitcoin is going to be on the receiving end of the punches. And that means Ethereum and all the other altcoins are going to do the same. I will bring up really quick Doggy Coin, which had a pretty large pump last month and a huge dump this month. It did have a pretty big pump, and so I personally don't trust this price action, and I certainly think this will get faded, and probably this trend line is going to get tested again. That's just personal opinion there, not financial advice. I'm not a financial advisor. And the other one that really pumped was ApeCoin, and it was pretty much a classic move, actually. As soon as we, on the 3-day, ticked above here, it was pretty much party on to the upside. And I personally think we're going to get rejected right here at the 618. We're at about 416 right now, and probably going to at least, come back down to about 323. We will follow up that one on that one over the next few weeks. ApeCoin, but putting in a bit of a rally amid the rest of the market, which is down.